Welcome in Ashish Parthasarthy, Head Treasurer at HDFC Bank. Ashish, thank you so much indeed for joining us today. Ira sums it up nicely. There are obviously global factors at play. There is also local factors at play, i.e. the current account deficit. What have you made of the level of the rupee? Most people were anticipating the rupee to weaken. One, the timing of this and the gravity of this move, has that taken you by surprise?
Yeah, I guess the extent of the move possibly is slightly surprising. However, direction, as you said, was something which is expected. And if you see the move in just the rupee, let's focus only on the rupee. There has been various phases, right? In the initial, if you go back to the beginning of the financial year, you have seen portfolio outflows from India, especially on the debt side. I guess debt yields, the interest rate cycle was turning in India, and you also have some amount of quantitative tightening in the US. So both that put together caused some debt outflows in the first 3 months of the year, and that started impacting the currency levels. That was followed with somewhat increase in oil prices, and that specifically affected oil importers, and India was one of the case. And this is the third one where it is got impacted by what is happening to the globe, to emerging market currencies globally across the board. Dollar is strengthening. Dollar index has strengthened against majors as well, and the bigger hit is being taken by the emerging market currencies. And so rupee has seen 2-3 phases for different reasons, but all in the same direction, and that's why you see rupee as one of the worst impacted currencies compared to various emerging market peers, other than barring a handful.
Good afternoon, sir. Ira joining in as well. Is there an element, sir, also of the perception that the rupee had become overvalued over the last few years? To what extent do you think that is playing out in the extent of depreciation? Direction, as you said, is in line with what's happening globally.
See, again, there are various measures to figure out whether rupee is overvalued or not. One, of course, just purely going by the trade-weighted RER, yes, that shows that rupee has been overvalued. But very often, and even RPI has alluded to this, that you cannot just take trade-weighted RERs as a guiding factor, because at the end of the day, capital flows have become a much bigger or almost an equal factor impacting currency rates and movements. So if you adjust for the productivity differentials, then the overvaluation almost goes away. And of course, in the recent times, the other currencies have depreciated. Prior to this depreciation, I think the rupee fair value was around the 69 odd level, so it was not very far from its fair value. Even now, it should not be very far from its fair value, given if you adjust for the productivity and growth differentials.
Ashish, what would be your assessment of this steep fall, and now people are now calling 72, 73 on the rupee, on the broader economy, i.e. the impact on the inflation risk, and secondly, what would this mean for corporate India, largely guys who are importing stuff? What is your assessment at this juncture on the broader economy?
So definitely it will have an impact on inflation, if it stays this way for a long term. But again, a lot of imported inflation is also dependent on the crude prices, while the crude prices have moved the other side slightly, at least, they're off their highs. So inflation will depend on, especially on the commodity side, what happens to the commodity prices also, which don't seem to be showing a lot of strength at this point in time. So, inflation could be slightly less of a worry than anything else. In terms of, corporate imports, again, a higher value or a depreciated rupee will definitely help, I would say, more make in India rather than, as compared to what we import. But however, yes, it could have impact on, profitability of entities who cannot pass on the increased, landed cost of whatever materials they use. and in a lot of cases they may not be able to, so it might not eventually impact inflation to that extent as what we would think it would do just looking at the value of the rupee and how much it has depreciated. But definitely some small pass-through.
So just taking that line of conversation forward, frequently when we've seen rapid movements in the currency, the hedging issue comes up. What is your sense of whether hedging has become more habitual to Indian corporates, and hence that concern about unhedged exposures, etc., is extreme or not extreme at this juncture?
So given the fact that rupee has been stable, and whenever you have periods of long periods of stability, obviously the incentive to hedge, especially on the imports and liability side, goes down, and you have increase in unhedged exposures. However, if you've seen this calendar year as well as this fiscal, rupee has been moving. It has moved since the calendar year around somewhere between 9 and 10%. And even in this financial year, it would have moved around 5 to 6%. So there has been hedging, especially on the import side. Hedging is almost continuous. What remains open, unhedged, possibly are some amount of foreign currency liabilities. That will always be an issue. But if you look at it over a period of time, maybe sometimes remaining somewhat unhedged on foreign currency liabilities help, because you may not see the kind of depreciation as compared to the cost of hedging. In short periods of time, yes, you would lose money. So those issues, I think, will not go away, will always keep on coming up. And I don't think India would be very different from any other economic entity anywhere else, where whenever there is stability, and the cost of hedging is higher than what you generally would expect the currency to depreciate over the long term, then you will have some amount of increase in unhedged exposures. But what happens is, given that now our economy is more open, more integrated, there would be various other flows which are not hedged. It could not just be domestic entities, liabilities or imports, but it would be also a lot of investments which are made into India by various investors, whether it be direct investments or by the portfolio investors. They would definitely then try to hedge for short periods of time whenever there is currency volatility. They may do it onshore, they may do it offshore, but that has an impact on the level of the currency onshore.
Okay, I was just looking at the Bloomberg screen. We began this year close to about 63, 64 to the dollar levels. Ashish, what would be your house call on the near-term levels for the rupee?
So very difficult to make a call when the momentum is so strong, but we think at this point in time we could be closer to the top for the dollar rupee level. And while the momentum can pull it slightly more in that direction, but we could see a phase of consolidation in the next 1 or 2 months.
So, we were just having an offline chat on Twitter, and there was this conversation going on about whether there's a perception that has sunk into the market that the government is in favor of a weak rupee policy, so to speak. We've had a couple of government officials now come and talk about the fact that the currency is overvalued. There were some comments suggesting that even if the currency falls to 80, it may not be a point of concern. Do you think there is some sort of a subtle shift in the way policymakers are looking at the level of the rupee?
I don't know. I'm not so certain that there is a significant policy shift. See, what happens is, we have seen shift in the intervention strategies by the Reserve Bank of India over various, periods of time. Some are more interventionist, some are slightly more hands-off. That will keep on happening in terms of the strategy. But in terms of policy, I don't think, at least I do not have enough material to believe that there has been a significant change in policy on the currency rate. I think the broad policy remains the same, that yes, rupee will depreciate to account for its fundamentals in terms of inflation differentials. However, if there is any sharp move either way, there would be attempts to manage or reduce the volatility of those movements. And I think the third policy or directionally is that we would continue to build up our reserves as and when there is surplus supply of foreign currency.
All right. So just one last question from me. In terms of what you're watching now from a currency market perspective, apart from oil and of course the trade numbers, is one now going to start watching the reserves also? I know they're way more comfortable than they were in 2013, but we have lost reserves. We're down to about $400 billion now. Is that a watch point? What else are you watching, sir?
No, definitely. You need to watch all parameters. Right now, I think it is more momentum which is moving the rupee rather than all these fundamental factors, because in the short term what will move is momentum. Then one will have to take call what will happen over the medium term, and that's where you look at all these parameters. We are significantly in a significant better position than what we were in 2013 in all parameters. I think so that's at this point in time slightly less of a concern. But yes, if the momentum is too strong, then that becomes an overriding factor which you will have to consider, and whether then if measures are to be taken to stop that or that momentum in one direction, which I personally think is very unlikely that you will continue to see this momentum over an extended period of time. Yes, you will have few days more, but I don't think we should see one-way move on dollar rupee for an extended period of time. And I think it should stabilize in a range, it should consolidate in a range which is more reflective of flows and fundamentals. Yes, what you mentioned in the earlier part of the show, that trade deficits are high, current account deficit has deteriorated significantly, and we also expect possibly a balance of payments deficit during this financial year. So all that will cause the level of the rupee to be, or the level of depreciation of the rupee in this financial year or in this calendar year to be significantly higher than what we have seen in the last year.
Always a pleasure, Ashish. We'll leave it there. Thank you so much indeed for joining us. Ashish Parthasarthy from HDFC Bank on the currency.